But meantime, the market overall shrugging off some pessimistic news that we're getting on the health front. Global cases of coronavirus rising there, surpassing 9 million cases globally, as the World Health Organization reported its largest single-day jump in cases, being led in some countries in India, the U.S. obviously still constituting a large chunk of those, as well as Brazil. And of course, it's worth mentioning here, the 4.5 million cases we had in mid-May, it's taken just 5 weeks to double from that number to hit the 9 million number we are seeing now. So that's important to keep in mind. What are we doing here in the U.S. about it? White House economic advisor Larry Kudlow gave the update there to CNBC, saying that it's not likely that we will see a fourth phase of economic relief in terms of what could be passed there until after the July recess, but the market's shrugging that off. As I noted, still the Dow up by about 0.5%. But let's dig into that thinking, though, when we think about what stimulus measures could come down the pike, as more people are fearing a second wave, if you want to call it that, in coronavirus cases here in the U.S. And for more on where the market could be heading, I want to welcome our first market guest today. That would be Ryan Payne. Payne Capital Management president joins us now. Ryan, happy Monday to you. Good to be chatting. I mean, when we look at this, interesting to see kind of how analysts have been upgrading their positioning here based on the way that stimulus has so far been able to keep the economy chugging along to the best of their ability. We look at Credit Suisse raising their year-end price target to 3,200 from 2,700. What's your take right now on maybe how the downside risks might be minimized here, as we have seen stimulus measures working so far?
Yeah, well, kudos to Credit Suisse for waiting for the market to go up 40%. So they started upgrading their price targets, and that's the problem with analysts. They make fortune tellers look good, Zach. But no, I think what we're starting to see is the economic data is actually coming in better and better, and much better than economists have expected. I mean, that jobs report was just so far better than any economist was anticipating in May. That jobs report was fantastic. And then retail sales last week, like the best number ever, doubling what estimates were, just shows you that the economy is getting better, a lot better than most analysts, most strategists, most economists have been saying. And, I've been on your show now the last couple of months, and probably one of the few calling for a V-shaped recovery. And I just think when you have this much stimulus out there, you have this many consumers right now with money in their pocket, there's a delayed or pent-up demand to spend, man. This thing can keep, this economy can keep moving up as we move along here.
Yeah, I guess one of the pushbacks on that thesis right now, and we discussed this last week too, since that jobs report has come out, we've seen weekly unemployment claims still not necessarily indicating as strong a recovery as some might expect in terms of people going back to work. And the question still remains, even though there is pent-up demand, we've seen that at casinos, strong surges, whether or not they can be sustained in the weeks to come. If you still have Americans who are worried about going out and spending their money, especially on travel, what could happen there? So while we have seen kind of a short-term rebound here as things start to reopen, what are the fears for that maybe to dial back a bit as you get maybe a month past reopening, 2 months past, or worst case scenario, if you see an uptick in cases continuing like we're seeing now, what could happen if things eventually, if you have no choice but to see governors maybe enact shutdowns yet again?
Yeah, I mean, I think it's going to be hard to get Americans back in, period. That's just my guess. But I think, the bottom line is I don't think you're going to see just a full shutdown again, right? That was a very dramatic thing that you saw globally. So I'm hard pressed to see that we're going to see that kind of dramatic move by governments around the world. I mean, that was a pretty extreme case of like literally seeing the whole global economy turn off at one time. So I think you are going to have fits and starts, and I don't think that's ever been a surprise. I've been hearing about the second wave now since March, right? That's not new news. So I think you have to remember the market is forward looking and it's already pricing in a lot of that bad news. So my thoughts are what you have to be really concerned about here, and I said this last time, is really the surprises in the positive. What blows my mind right now, Zach, is you have $4.6 trillion sitting in cash. Investors have taken like $2 trillion out of the market, sitting in cash right now. And meanwhile, economic news gets better and better and better. So, I think all the fear is kind of priced in. People are afraid of that second wave. So you may get some of that. But again, if it's not as bad as people think, and I don't think it's going to be as bad as people think, then really surprises are going to be in the positive, not the negative.
Yeah, well, it's interesting to hear you talk about that, because there's almost two camps here when we think about what could happen in the back half of 2020. There's the camp that says even if there is that rebound, maybe you should put your money more in defensive stocks, or if there's not, there's a lot of ability to be playing some of those exposed sectors like the airlines or cruise liners. So what is your thinking? Because when we had JP Morgan putting out a note last week to wrap things up, really pushing the idea of technology, communications, and healthcare, the so-called end game winners here that we'll see, I guess, boost whether or not we get a second wave. And you think about Zoom and all these companies benefiting from the shift to work from home, whether or not it's still exactly what we're seeing now, they could at least maintain a lot of that boost moving forward. So what's your thinking around the safest way to be navigating all this?
Yeah, I think the nice thing is since the bottom, you've seen a lot of great market breadth. And you look at all the beaten down sectors, like I've been espousing energy for a long time here, and energy stocks have had the best run off the bottom. So I think it really pays to diversify your money here because there's such a disparity between healthcare stocks and growth stocks where, let's face it, man, there's been a lot of good news baked into those stocks. I mean, valuations on those stocks are very, very frothy here. And they didn't get hit that hard by the pandemic, right? I mean, if you're Amazon, you're probably taking more orders than ever. And you're starting to see that multiple expansion just go up and up and up. It's not really because they're really growing their earnings out significantly. Meanwhile, and I just love cyclicals, I've talked about it a lot, is you really have to think about your portfolio in the stocks that are going to benefit from the economy reopening. I mean, airlines are the perfect example, right? As things start to mobilize, we feel more comfortable, we're going to travel more. All those beaten down stocks like airline stocks are going to benefit from that big time. And they've already had the biggest price discount when they sold off. So yeah, I think you definitely want to diversify here and internationally as well. If you look at the multiples on emerging market stocks right now, even developed Europe right now, it's just so attractive versus what you're seeing in big cap US. So with my clients and our portfolios, we're absolutely diversifying across the board. I love to say it every time I think I'm on your show, but the S&P is just a tech fund and drag now. So don't just put your money there. You're just buying tech.
Well, what is interesting is, too, in that JP Morgan note, they did kind of caution on emerging markets due to, the public health issues that we've seen there, whether or not they had the same firepower that we saw the Fed address here. But when you do look at what has come from the Fed and the fiscal support that we were discussing here, what's your take on maybe the way that next wave of stimulus, as I said, Larry Kudlow, not thinking we're going to get that before the July recess, but what might happen if we do get that, since it has supported stocks so far? What are you thinking would need to come from that to really keep the rally and rebound that we've seen so far sustained through the back half of 2020?
I mean, they've done a great job, by the way. And I know a lot of people, they're going to have their issues with what the Fed's done. But I think the fact that, I work with a lot of entrepreneurs, a lot of my friends are business owners, that everyone was able to get a check for the most part from PPP. I mean, it's a pretty high percentage. Is companies have really been a way out the storm here. So if we get an extra bridge for consumers here as the economy is obviously, emerging, I think that's obviously going to be very, very bullish. But at this point, I think that really what the market's really pricing in, because I think the market expects we're going to get more stimulus. And there's no coincidence that the market started rallying back in March as soon as they announced that first CARES package. But I think what you have to start thinking about again is economic data keeps coming in better than expected. Whatever's been anticipated has been way wrong, which economists usually are, by the way. So I think what you have to start thinking about right now is, and there's just so much money sitting in cash, and there's so many investors that have missed this move. I keep talking about it, but money managers, hedge fund managers, they're sitting around, they're hoping for a dip. And when they don't get it, you're just going to get a panic buy into the market. So I think that's what's going to keep driving things. There's surprises in the positive on the economics, and all that cash on the sidelines forced to get back into the markets.
All right, we'll see what happens with that dry powder sitting on the sidelines. But there you go, an optimistic read on the market right now. Ryan Payne, Payne Capital Management President. Appreciate you taking the time.
Thanks, Zach.